So, you're thinking about buying a new condo in Singapore, right? You're definitely not the only one. But let's be real. With prices hitting all-time highs, you have to ask yourself, is this a brilliant investment or a really risky bet? Well, in this explainer, we're going to get to the bottom of it.
I'm sure you've seen it all over the news, right? These huge crowds, massive queues for new condo launches. And this is happening even as prices and interest rates are climbing. So what is really going on here? And the big question is, should you be getting in that line with them?
Is this whole thing a sign of a super strong market? Or are people just getting swept up in the hype and taking on a massive amount of risk? To figure that out, we really have to understand the new rules of the game. So let's start with the market itself. Okay, first up, the market landscape. Because, and I can't stress this enough, if you're using a playbook from 5 or even 3 years ago, you're probably going to have a bad time. The entire game has changed. It really all starts with the land. See, the government is releasing fewer of those really big plots, which means developers are now building smaller, more exclusive projects. The land itself costs more, so they're marketing these new condos as premium, high-end products, even in neighborhoods that we used to think of as totally mass market. And for you, the buyer, this all boils down to one thing. The price you pay just to get in the door is higher than it's ever been. And that brings us to the single biggest number you need to wrap your head around. New launches today can cost a staggering 20 to 30% more than a similar resale condo that's literally right next door. Just let that sink in for a second. You're not just buying a home, you're paying this huge premium for the word new. You're basically betting on tomorrow's value today. So you hear that massive premium, and you have to wonder, why on earth are people still lining up for these places? I mean, what are they seeing? Well, they're not crazy. They're focused on a few really powerful advantages that, frankly, only a new launch can give you. Okay, the biggest financial perk, hands down, is the progressive payment scheme. Think about it. Instead of a giant mortgage payment hitting your bank account from day one, you pay in smaller chunks as the building actually goes up. This gives you years to save more money, lets your income hopefully grow, all before that full loan kicks in. It's a huge, huge advantage, especially when interest rates are high. And of course, there's the fact that you're buying a home that's actually designed for how we live now in 2026. We're talking layouts built for working from home, smart home tech that's just standard, not some pricey upgrade, and facilities like on-site co-working spaces. Plus, you get that peace of mind, right? No immediate renovation costs, and a 1-year warranty where the developer has to fix everything for you. Can't beat that. And for all you investors out there, there's the exciting first mover advantage. If you buy into an area that's about to be totally transformed, a new MRT line's coming or there's some big urban renewal plan, you're basically getting in on the ground floor. Your property's value could go up not just because it's a nice place, but because the entire neighborhood is leveling up around it. But hey, it's not all shiny new amenities and potential profits. That really high price tag we talked about, well, it comes with some very real risks that you absolutely cannot ignore. This is the reality check. The biggest risk is actually baked right into the price. When you buy at the peak of the market, there's just less room for your property's value to grow quickly. And then you have to factor in things like stamp duty, plus that long 3 to 4 year wait for construction. I mean, anything could happen in that time. Interest rates could shoot up again, or the government could introduce new cooling measures. And for investors, oh man, this is where it gets really, really tough. Just look at these numbers. Because the purchase price is so high, the rental yield you get on a new launch might only be around 2.5%. But if your mortgage rate is 3.5%, well, you're losing money every single month just to hold on to the property. That is a cash flow nightmare. Okay, so given that the stakes are so high, how do you even navigate this market without getting burned? If you're still thinking about buying a new launch, you absolutely need a strategy. So here it is, your playbook for buying right. The first rule is timeless, but it has never been more important than it is right now. Location is everything. In a premium market like this, a fantastic location is your safety net. It's the one thing that's going to protect your investment if the market takes a turn. Seriously, it is absolutely non-negotiable. And that means you have to do your homework. How close is it really to an MRT station? What about good schools? Are there big companies and employment hubs nearby? These are the fundamentals that are going to sustain its value and make people want to live there for years to come. Oh, it is so easy to get dazzled by a fancy show flat, isn't it? But you can't just look at a new launch by itself. You have to physically walk across the street and compare it to the older condos nearby. And you have to ask yourself the hard question, are these brand new features really worth paying hundreds of thousands of dollars more? This table really just puts it all side by side. With a new launch, you're paying that premium, and you have to wait 3 to 4 years, but you get a brand new unit with low maintenance. With a resale, you pay less, and you can move in or rent it out immediately for a higher yield, but you have to be ready for possible renovation and repair costs. It's that classic trade-off, right? Price versus time versus convenience. Okay, finally, and this is so critical, you need an exit strategy before you even sign on the dotted line. Who are you going to sell this place to in 10 years? Who is your future tenant? Think about it. If you buy a tiny 2-bedroom unit in an area famous for its primary schools, you got a mismatch. Your property has to be perfectly designed for your future buyer or tenant. So after all of that analysis, what's the final verdict? Is buying a new condo in 2026 the right move for you? Look, a new launch condo in 2026 can still make perfect sense for some people. It's a really solid choice for owner-occupiers, people who plan to stay there for the long haul and just love that modern living. It also works for patient, long-term investors who have strong financial holding power. But it is a much, much riskier path for short-term speculators hoping for a quick flip or for investors who need that positive rental cash flow from day one. So the goal here isn't to scare you away from new launches at all. It's to arm you with a clear-eyed, practical strategy. Because in the 2026 market, success isn't really found in buying what's new, it's found in buying what's right.